Hi guys, today we will discuss Bitcoin US dollar 1 day chart. Now the data is taken from Bitfinex. Now if you look at it, the highs are getting lower right here. And like within the realm of like the fall, you find bullish engulfing candles right here, and it does rise after that. Now the point of view or the point of thinking is always remember what is happening in the real trend. Whenever the highs are getting lower, that's not a good sign. And that means that there will be like more traps. The second thing, if you remember from the previous lecture, is the box theory. See, this is the lowest box. Let me put the box in. Horizontal line on top. On the closing basis, this is the top. And if I pick on the lows basis because there are too many lows, this is the bottom. And it's stuck in between. It's not moving anywhere else. So remember, if you end up in this kind of trade, then check out the highs. The highs are getting lower, that's not a good sign. Now eventually it does fall off, but then it makes a hugely popular green candle, what I call Malpuza. If you look at it, it doesn't have a low, it doesn't have a high. It's extreme. Now if you will look at it, if I just keep my mouse on it, let me zoom in further. Right here, you will see that the open is 1925 and there is the low of 1924.10. So 90 cents low. But as you can see, it's not significant enough to like be shown on the chart. So whenever you can't find low or high, that's a Malpuza candle. And it's an extremely bullish candle. Now, as you can see, the price rises up. Boom, it rises up. And the best part is it rises beyond the top box that we made at the top of the box. And that's always a bullish sign. It does fall off, it does rise back up. But the point is, this top of the box acts as a support for it. So it's a good sign. So we will wait, and once it falls below the realm, get out. And as we have discussed like already, you get out. But as you can see, it's falling within the box, so be vigilant. But the point of remembrance is, whenever it gets out of the box, then the box loses its worth. It loses its status. And as it loses its status, so you have higher chance of making it like of getting it a comeback, and that can like change the fortunes. Now you can see further, it rises up, down, and then again you get out. Now if you look at it, Bitcoin is like known to be the most volatile cryptocurrency. But as you can see in the 3 lectures on Bitcoin, we haven't faced that. We have seen the normal. We have traded like Forex, stocks, penny stocks, and everywhere our candlestick formula works the same. My technique develops the same. The buy sell happens to be the same. So when everyone says that Bitcoin is the most volatile cryptocurrency, then even we as the investor, through our technique of candlestick, doesn't face that. So the best advantage of cryptocurrency through candlestick is it doesn't like allow its madness to affect your trading plan. And as you can see further, it remains within the same stuff. It happens to be like giving us the same signals where we can buy easily and sell easily without the additional risk. And as you can see, it does rises back up. And your risk is extremely limited because as you can see, we are always like buying, selling. We don't have that extreme risk that what if it falls 50% off? It doesn't. for us it remains the same. Boom, it goes up. Now the formula of great profitability is stick to your guns, stick to your plan. And whenever you stick to your plan, you will always make good money. And as you can see, we are making good money. Now, the thing about boxes is whenever it comes up, remember that you have to be on your toes. You have to buy, you have to sell, you will be having losses, but you have to stick to your plan. Or you can, let's say, stay out of the market for some time, because basically what I call candlestick will always make you money. That's not a problem. The point is to stop those losses. It's not about the money, it's about the losses. So in candlestick trading, your aim is not to make money. Your aim is only to stop those losses. And when do those losses come in? Usually in a box. So if you find a box and you don't want to take extra risk, then stay out. If you want to be in the market, then candlestick's the best thing, because it lets you have the best profit ever. Now if you look at it, we have bought, sold, bought, sold, bought, sold, and it continues to go up. So the volatility that everyone tells you, so it comes for your help. On the rise you make money, and on the fall you're always out. So on the rise, it's like an ATM, a money making machine for you. So that's a good part, right? But on the fall, it always lets you ask you to get out. Example, right here it told us to get out. The next day it did fell off. Okay, right here it told her to get out. The next few days we got back in. Now again it's telling us to get out. But the best part is first top, second top, fall. So it's double top. A problem. Now this is a long-legged doji candle which says buy. Why? Because the body of the green candle, the body of the doji, is eating the red candle right here. So it's a buy signal. But remember, it's going for the third high. And usually on the fourth high, it never stops. Now this goes up, stops on the third eye, and is going a bit down. But now we know if it now crosses up, it won't go back down. And I believe it is going up because its close is, this close is 43.83 and this open is 43.86. So this is higher. So it's the highest closing ever, and on the fourth high. And I believe on the fourth high it never stops. Boom, boom, boom. It goes up and then it eventually comes down. Now, for people who want to reduce your risk even further, let's presume you don't want the risk to be extreme. But remember, in reducing risk, your trades will always increase. This is the thing. Now, how can you reduce your risk further? The answer lies in the lows. This was an extreme low, so you will be putting your stop loss right here, right? Eventually the price rises higher. So once it rises higher, then you will pick again the biggest candle that you can find, but not this one higher than that. It's this one. So you will place your stop loss on this low. Then it again rises up right here. Let's presume we are standing here. So on that moment, you will again find a higher candle, not this one, higher than that. So it's either this one or this one. So this low is higher. So you will place your stop loss right here. Then price rises higher. Once you're here, you will place your stop loss on this low, this red candle low. So basically, you're increasing your stop loss day by day. So your risk is getting reduced because if it falls off, you will get out early. Number one, rule of thumb, that you can increase your stop loss further high. Number two is profitability. Whenever you're in extreme good profit, then you can place your stop loss on the immediate low. So on the immediate low, If it goes against you, then that immediate low is your like getting out point. And you get out early. Boom. It goes down. You get out here. And let me place the sell signal right here. Here. So we have sold. And now we will stick to our game. Now, what do you see right here on this 1 down candle, 3 up candle, 4 down candle? 3 method bearish formation. And it tells you, boom, market is going down. And it just fell off. Boom! You would have, let's presume, seen the trend at 43.05. And this is 32.38. That's a $1,200 fall. $1,200. So that's 33% fall from 33% at 3,238. And if you go at this rate of 4,300, then it will reduce to 30%, I believe, because it's 1,300, so it will be 29%. But eventually it goes down to 2,981, and now it's rising back up. And you can easily buy it. Right? Wait a minute. Right here. And it is going back up. It does come down. And it's closing lower, so you can sell it. Let me place the sell signal. Wait a minute. And here we go. Now it's rising back up again. So you'll be buying it back up. Now, as a rule of thumb, on this low, you would have like already sold it rather than waiting for this close. Because this is a big white candle. Now, why do I suggest you to pick big white candle? Why? Now, there is a reason for it. And that reason is usually big white candles are associated with the big fish, the big player, anyone who is buying majority of the shares or stock or cryptocurrency or whatever. The basic theme is it's the big fish, because when the big fish is buying, he's buying usually for a higher level. Example, if I'm trading on the weekly level, then any day I can find the prices to be lower and I can just jump in to buy everything. Or I can find like huge like volume in it, everyone is selling, and I can just jump in and scoop every buy, scoop like everything. So basically, in that scooping, the price rises higher and forms a good large green candle. So that candle in front of the retail investor or in front of the candlestick trader represents a good investor. Now, why on earth he will be buying? There is something extraordinary that I don't know and he knows. But I know another important thing, that he is buying. That green candle is not a like fluke. It represents something. If it is eating, and if you look at it, we bought it here, it's now jumping higher. And now what's happening? This high is crossed here. Now we need this high to be crossed and this high to be crossed, so that the bullish momentum returns. And right here, it has crossed this high. Now this high is needed. Wait, it falls off. Now once it falls off and it closes below this green candle's open, this small green candle is open, that's our cue to get out. So you always get out at that moment, right here, and don't worry at all. The price again rises higher. This close is higher than this open, so it's the green candle is eating that red candle. Now I know you will be thinking that this green candle is not that much powerful. Yes, it's not. This was more powerful. But the point is, it's making a higher highs. That's the big point. So you need to look at the higher highs. And as you can see right now, it's crossed this high. And if I just zoom out to show you something, whenever the highest highs are crossed, the price usually moves to the it moves higher, because higher highs acts as a resistance. It acts as a way to sell. Now just look at it right here. In June 2017 it fell off, right? And then it rose back up. Now once it rose back up, let me zoom in to show you further. This was the high, right? Now this is the box that we created. If I just move the upper box to the closing of this red candle, the previous high, you will find that it rose back up and stopped at the exact moment. Then again it lingered on here, and once it crossed here, it was bullish. Now the same thing is happening right here. Wait a minute. Yeah, right here. Let me zoom in further for you. Now this line represents what? It represents the highest point. So once it crosses that, you will see again huge rises. Now let's look at it. Boom, it crossed right here, 5400. So now we know newer highs are in the making. And boom, it goes up, up. Now it's staying down. So you will be selling as per our candlestick plan. But the point is, do you believe it's bearish? No, because the highs are getting crossed. So you see a Gravestone Doji, huge high, but then again a small green candle eating that red Gravestone Doji. So you'll be buying it again. Why? Because you know it's above the highest point. This blue line was the highest point in closing basis. It's above it. So more highs are coming up. And it does it does go up, but this Doji star eats this green candle, so it's again a sell signal. So the point is understanding the game. Now at this moment I am extremely bullish. Why? Because it's at the highest point. Even though the price is falling off right here, but it is going back up. Now this closes 58.90. This open is 59.02. So it's lower. You cannot buy right now. Wait. Red, red, green. Now it's a buy signal. So buy right here. Right here. And it rises up, 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 and up. Boom, boom, boom. And now it's falling. So this is the game plan. It falls off and you're out. But the point is, this line was at 4,903 right here. And this highest point is 7,595. So it's 50% higher. So, and what really happened? You ate it all. You were able to grab majority of that bullish position. And that's why I say always keep an eye on the highest point and on support and resistance, because right here it's falling. So what do you think it can fall to? Number one, it's low. It cannot increase this low. If it does, then I will be bearish to the tune of this high, and it's reaching that. It's going further lower. So now you can expect this closing or this opening and these lows. But the low is even further. So you can expect it to touch this blue line. But it brings a green candle. So that expectation is now lost and we can believe it is going higher. But our major problem is, again, this close opening or closing basis. This one is our problem. Let me put the line here, right here. So we can expect the price to go up and stop here. Now if you look at it, this is the first high, this is the second high. So it can touch at the third high, and on the fourth high it was crossed. But on the third high it has crossed. See? It's on the closing basis, it's higher. So never sell on this line. It's just a reference point, not a buy sell signal. because your buy sell signal depends on candlestick. These lines represent like important phase, but not the decision making process. And now you can see it stops, but it goes further high. And now it's sell. So the point of concern or the point of trading is understanding the highs, lows, and how the market is making up. Now you can see this is the line that we made on the highest point, right? But right here on the fall, the low is exactly on the same line. So these lines are also important to keep an eye on it. Thank you.